Today we got SMTs, Smart Money Techniques, Smart Money Technique Divergence, or SMT Divergence. I know you guys have probably seen it, and you probably also have no idea what they are and how to use them, but don't worry, it's exactly what I'm going to show you guys. So let's get straight into it. Now, an SMT divergence is just a trading concept where two or more correlated assets like NQ or ES show opposite price movements. Like let's say ES takes out a high, NQ doesn't take out that high, or vice versa. ES takes out a low and NQ doesn't take out the low. They're supposed to be correlating assets, which means they move at the same pace and they go in the same direction. They move the same. That's what it just means. So when there's a discrepancy or an SMT divergence, it's like a possibility that there's market manipulation by banks or institutions just to grab liquidity. And this is going to tell you where there's a possible like reversal. Like let's say ES goes up, takes out some highs, NQ didn't take out the highs, but now you see ES took it and it's starting to reverse, and you get like a setup for a reversal on NQ without taking the high. You're like, okay, we have an SMT here, so we could reverse. And I'm gonna show you guys the exact examples right here. So there is two types of SMTs. There's a bullish SMT and a bearish SMTs. So bearish SMTs happen at highs. Like in this example, you see ES takes out this high and NQ does not take out the high, but you see that ES takes it out and starts reversing immediately. You see a setup for a reversal on NQ, then you take it because of the SMT. Now, the bullish SMT happens at the lows. When you see ES sweeps a low and NQ doesn't sweep a low, and you get a possible reversal setup, you can take it because there's a higher probability of a reversal happening just because of the SMT. Now, it's super important that you guys understand the importance of the time frames. You don't want to take an SMT trade just because it happened on the 1 minute. Of course, it doesn't mean that it will not happen. It can always happen, but you want to have a higher probability, so you want to look at SMTs on higher time frames. You want to look at the 5 minute, the 15 minute, the 1 hour, the 4 hour, the daily, you name it. You just want to have higher time frame analysis for your SMTs. So obviously pair it up with your setup, but SMTs are like a bonus. When you see an SMT, it's like, oh shit, like an extra confirmation of a possible reversal. And it can be something like this. You could have, like, for example here, let's say you see the SMT and you get an IFEG right here, and this is your model. You take this trade off the SMT plus IFEG just because the SMT adds to your confirmation. I know you guys haven't learned about IFEGs yet. I'll go over that in the next video, but for now, this is SMTs. Same thing goes with bearish SMTs. So let's say you see the SMT there on ES taking the high, NQ not taking it, and you see a setup right here. Obviously, you take your short off there. There's probably an IFEG right here. And this is what's going to happen with SMT setups. You're going to use an IFEG because that's the most probable, or a CISD, the most probable setup to occur. You're going to tap probably into a fair value up in the higher time frame and an IFEG. That's probably what you'll get with an SMT setup. But yeah, remember, bearish SMTs happen at highs, always happen at highs. You cannot have a bullish SMT at the highs because if you're sweeping liquidity from the top, that means you're going to reverse low. And with bullish SMTs, you can't have a bullish SMT at the highs because it's only if you sweep liquidity from the bottom and start going higher for a reversal. SMTs are only for reversals. You can't have an SMT for a continuation. An SMT is for a reversal. Now, let's look at some real-time examples on NQ. On the left side, we have NQ and ES. On the right side, we are on the 1 hour time frame on both assets. So here you can see we have a low on NQ and ES. Now, what happens here is that NQ does not take this low, but we see ES actually does take it right here. So we're going to mark it out as an SMT. Now, what do we want to do? This is the 1 hour time frame, so we want to drop into, let's say, the 5 minute time frame first. And let's look for the area of the SMT. You can see it's right here. And same thing on NQ. Go to the 5 minute. Now we have spotted where the SMT actually is. We're going to go to the 1 minute, right? Because you're going to use the 1 minute for your entries. So we're right here in the 1 minute. You see that ES took the low and NQ has not taken the low yet. And now you're going to look for your entry, right? So right here, we have the SMT pinpointed out, and we're like, okay, well, I see that we have an SMT and there's a possible reversal here. Let me look for a reversal setup. And you're like, okay, well, here I see that we have a CISD, first of all, and a small IFEG. And you're going to take your long setup, and you can probably target some nearby liquidity. Let's say you wanted to target this point of liquidity right here. See the trade hits, and you could take it on ES, but you want to take the trade on the asset that doesn't have the sweep. So in this case, ES is the one that swept. So you're looking at NQ because NQ hasn't swept, and you have an advantage, right? You have an advantage on NQ because you know that ES swept, and it's a possible liquidity grab from the institutions. Sorry, meaning that it's a liquidity grab. You have an advantage. You know that there's a possibility for reversal, even though you haven't swept that low. So that's the bullish SMT. You see the possible setup right there. You take a reversal trade off that, knowing that ES swept, NQ didn't sweep, and you have a setup for a reversal without sweeping the low. And that's an example of a bullish SMT on NQ. Now, remember that this entire boot camp is going to be kind of split into two parts. One part being part one, where I'm just showing you, I guess, confluences. You're just looking at confluences, things that are going to help you build out a trade and see what to trade. So I'm not showing you guys how to take a trade, rather showing you the key components that will make up your trade. So in this case, an SMT is a component, a confluence to your trades. So I know it's not making too much sense as to, okay, how do I take the trade here? Because you're learning everything, which is a base for your trading. You're learning a base to trade. So using all these confluences, part two of the bootcamp, you're going to be learning how to actually execute and take these trades. But it's important that you note and understand what these confluences are, how they work, why they work. And SMTs, bro, they work because most of the times SMTs are something that's a liquidity grab done by institutions or banks because they have a lot of capital. Now, these assets are supposed to be correlating like NQ and ES, meaning they move the same and they take the same levels out. If you see one asset takes out a level and the other one fails to take it, it's a possible reversal indicator because it's a liquidity grab. That's what an SMT is for, you guys. That's the basic reasons behind why it occurs, and why you should take it is because you have an advantage that you're understanding there's a possible liquidity grab here. You want to trade with smart money, meaning you want to trade with the banks, with the institutions, not against them. They have more money than all retail traders, so there's no reason to go against them. Use it to your advantage. And that's SMTs for you guys. Now, if you guys like these videos and you want to keep seeing more videos on the bootcamp, make sure to like the video and comment what you guys want to see next on the next video. And make sure to follow the socials, official EA Trading on TikTok, YouTube obviously, and Instagram. And my main Instagram right now, I'm kind of using it more for trading rather than the official EA Trading page. It's Aquiles.Erminy, and I'll leave all the socials in the comments below. See you boys. Peace.